I'm Owen Bigland. This is the Inside Edge video blog. Okay, it's Saturday, so let's get back to, I know it's been a while since I've done some Saturday blogs. They've been intermittent here because it's been a busy summer for me. I've been traveling most of the summer. It's been really nice to take a break finally after, 2.5 years of bustling business here coming out of COVID and during COVID. And a lot of realtors like myself have taken the time off, just, kind of unwind and get away from the business for a while. We'll see what the fall market brings. I think it's going to be pretty busy. I've got a lot of listings I'm going to be putting out starting in September and October, but it's been nice to get away here. But I wanted to just respond to a couple of comments I've got in my YouTube channel, from my viewer mailbag here, about investing and how I look at stocks and my investment portfolio and all that other stuff. I'll plug my book here quick. This is why I wrote the book. A lot of the questions that I get, are in my book, where I go into great detail on how I've built up a large real estate portfolio, how I rent my properties and look at rental properties, and what I call the ghost ship to wealth, using leverage. And then I have several chapters on my stock portfolio, my second love, the type of companies I hold, the index investing, the set it and forget it, buy, hold, reinvest, call it a day. That's all you need. People, if you watch the news, the CNBC and the Bloomberg, a lot of people are bombarded with this media stuff on investing, and they fall for their games. The game is that these stations like Bloomberg and CNBC and what you're reading in these financial publications are on TV. It's just entertainment. That's all it is. The dirty secret that I talk about in my book here, and this is from some very high-level private equity home office guys in New York that I've been fortunate enough to know over the years. The big game that these financial planners and hedge fund guys and money managers will say is that you need me to navigate these tumultuous times, the Fed tightening, the interest rates, the economy. You need me to buy this, sell that, get you into this, hedge you against that. It's a giant lie. And, Jack Bogle, Vanguard, Warren Buffett, there's been hundreds of books that have exposed this myth about investing, and that it does not have to be complicated. Most people could buy one purchase, buy the S&P 500 through Vanguard, the VOO, 6 basis points is what you're going to pay, dirt cheap, and then call it a day. You would beat 80% of the active managers every year, and you will probably outperform 95% of the active professional money managers after 20 years. Sounds crazy, but that's what you'll do. The numbers don't lie. Spend that, I talk about it so much here, doing the 100 hours. That's all it takes. 100 hours, learn the basics of the stuff, learn about index investing through low-cost ETFs. That will do everything that most of you need. Then if you have a real interest in it, like I do, learning about the companies, reading the financial statements, learning about the CEOs, and maybe you want to get a little bit better yield, a little bit better dividend yield, then you can branch out and start buying some individual stocks. But do the research. Buy high quality names. Don't buy the meme stocks. Don't buy the companies with no revenue, no chance of ever making any revenues or profits. You're going to get your head handed to you eventually. They're pump and dump, most of them. But a guy was asking me, Owen, how do you reconcile the valuation of your dividend portfolio, real estate, and monetary policy? I think things are more complicated than just DRIP, which is dividend reinvest, to financial freedom. No, it's not. First off, I pay no attention to monetary policy, interest rates, the economy, if we're in a recession, out of a recession, the Fed. I've been in this for 35 years. I've learned from the best that that's all just noise. Instead, focus on what you have control over. Getting into a good career, paying yourself first, 15 or 20%, and getting that money to work. Don't save the money. Forget about saving. Saving's not going to get you anywhere. You have to invest your money, like I talk about in my book. Best way for most people is just index invest through low-cost ETFs, through Vanguard or iShares. You, again, will outperform all these guys that you're seeing on CNBC, on Bloomberg, that think they're experts, they're smarter than the market, and they're not. Nobody is smarter than the market. Warren Buffett will tell you that. Just buy and hold high quality names. If they pay a dividend, reinvest the dividend, call it a day. you will become a multimillionaire, depending on how much you're able to contribute, of course. But that's how I became a multimillionaire at a fairly young age in my early 40s. And how today, the passive income I'm earning from my real estate portfolio and the dividends that my equities pay is more than enough for me to live on comfortably. And when I say comfortably, I mean eating at restaurants 5 days a week, taking nice trips to Europe and all over the place. But you set the bar as high or as low or wherever you want. Of course, the more fuel you put into this, the more you're going to get back out at the end. Not everyone can put away $100,000 or $150,000 a year, but it starts with small beginnings. I started with extremely small beginnings 35 years ago and built it up from there, the snowball. I went into one of my books here to help this guy here. So this was a quote from the late, great Jack Bogle. John Bogle, the founder of Vanguard, the godfather of index investing, one of the smartest guys on Wall Street. But both Charlie Munger and Warren Buffett have got all kinds of quotes exactly like this. So here's some of the greatest investors. My guys in New York, even though they're running what they call home offices or private equity, they will tell you this exact same thing. Just index invest or buy high quality dividend paying stock or some high quality tech like an Apple, an Amazon, a Google, Costco, Nike, Starbucks, Johnson & Johnson, Royal Bank, TD Bank. You guys know Home Depot, Visa, MasterCard, UPS, Estee Lauder, McCormick. Those are the names that I hold. If you bought my book, you see I give you guys my portfolio in there. And then I've got the S&P 500, the Vanguard Dividend Appreciation Fund, the VIG, the VTI, which is the U.S. total market, the TSX 60, XEI, the Triple Q. Call it a day. That's all you need. Or just stick with just some index investing just to start. Your first $400,000 or $500,000, in my opinion, should just be in index investing. After that, sure, if you want to do the research, start buying some individual stocks. Jack Bogle. Over 30 years, you're going to see prosperity, cheap markets, expensive markets, recessions, bear markets, inflation, deflation, etc., etc. Have a plan that you can stick through all of it. If that plan is trying to predict these events, then it's not going to work. So that's why this guy's question, how do I look at my real estate, my dividend portfolio against monetary policy and all that other stuff? I don't. My plan is to buy the indexes, buy the entire market, the 500 best companies in the United States. They're all incredible companies, cash flow machines, most of them. Index invest, and then I'm going to buy a basket of high quality tech names like Apple and Google. I'm going to own all the Canadian banks because they're a license to print money. The telcos like Bell Canada and TELUS, because again, they're a license to print money too. And just hang on to them, collect the dividends, reinvest. There's going to be some incredible years where I'm up 20, 30% in the year, and then there's going to be some down years. This year might be one of them, and then there's going to be some years where my portfolio is flat. The nice thing about having the dividend income of several $100,000 every year now, because I've got a big portfolio, is that money keeps coming in rain or shine, regardless of the underlying value of my portfolio. That'll help you stay the course. The other thing I've told you guys, I've blogged about, and I talk about it in my book here, I try and put it into simple terms. If you were to buy, Bell Canada, let's say, is yielding 5% right now. If you were to buy $10,000 of Bell Canada, that's going to give you $500 every year in dividend income, rain or shine. And next year, it'll probably be $525. The year after that, $550, because they keep raising their dividend. Well, look at it this way. You put $10,000 into Bell Canada, that's $500 a year, rain or shine. You just bought yourself 2 days of financial freedom. If the house is paid off, a lot of people could live easily on $250 a day for food and entertainment and everything else. So that $10K, and some people can live 5 days on $500 a year. It all depends on your lifestyle and where you live. But look at it this way. By the $10K, I just bought myself 2 days of financial freedom for life. Now, continue that on until you've got 365, and now you can call it a day and live comfortably just off your dividends without even selling a share. That's the other thing. Your portfolio will continue to grow. And those dividends will outpace inflation by far. My portfolio sure has. Again, my book, this is why I wrote it, guys. It's a door opener here. The basics of how I did it. I not only talk the talk, as you guys know, I walk the walk, talk the talk. I've been there and done it. I started with very little 35 years ago and built a large real estate and stock portfolio. And it was not anything tricky. It wasn't buying and selling this and hedging that. It's a simple plan. And that's what trips people up. And I talk about it in my book at length. People think they have to be doing something all the time. They have to be watching BNN. They have to be watching CNBC. I got to see what the Fed is doing. What are interest rates doing? What's the housing market doing? It's a waste of time. Stop focusing on that stuff. In the end, it will all work out for you if you buy the right companies or buy and hold the right real estate. Quality Vancouver real estate. It will always work out in your favor over the long term. Remember that. In the short term, all bets are off. Nobody has a crystal ball. I certainly don't. These guys you see on CNBC and Bloomberg, they have no clue what they are talking about. Again, it is just entertainment. That's all it is. If they went on there and told you the truth, buy the Vanguard S&P 500 and call it a day, end of show, the show would be 10 seconds long. Wouldn't be very entertaining, and they wouldn't be able to generate much ad revenue. Instead, they're going to tell you all kinds of analysis, where I see this going, where that's going, buy this, sell that, hedge that. It doesn't mean anything. It's not going to get you anywhere. And this isn't my advice. This is stuff that I've learned from the best, the Warren Buffetts and the Jack Bogles, the Peter Lynches, and many of my mentors in New York that are in the financial industry that make their money on commissions and managing money. They'll tell you behind closed doors at the bar after a couple of drinks that it's all a facade. Just buy the index or buy high quality names and keep them. Call it a day, monitor them. That's all there is. Tune out all this stuff. And that's why I tell people in Vancouver especially, it's a hot real estate market, always has been. You know, it's the number one topic at the dinner table or when you're out at drinks or whatever. It doesn't have to be. It shouldn't be. It is for me because I'm in the business. It has to be. If I wasn't in real estate, I would pay pretty much zero attention to what the day-to-day market is doing in real estate. Who cares? I own my own home. I'm paying it off. I'm enjoying the home. I bought a rental property. I've got a tenant in it. That's all you need to worry about. Time will take care of everything for you. I'm Owen Bigland. As always, thanks for watching. Thanks to all my new subscribers. Thanks for everyone that continues to buy my book on Amazon. I'll see you next week.